If you're in Nigeria right now and you want to start investing but you're confused, overwhelmed, or scared of losing money, then this video is for you. Today, I'll show you exactly how to start investing as a complete beginner, even if you're starting small, like 1,000, 5,000, or 10,000 naira. We'll talk about the best investment options in Nigeria, the mistakes beginners make, where Nigerians lose money, and how to build wealth step by step in this economy. Make sure you watch till the end, because I'll also give you a simple 3-step plan you can start today. And please like this video. Liking this video is very important because it helps more Nigerians discover this content and start their wealth-building journey. Understanding what investing really means. Before we enter the investment platforms and strategies, let me break down something most Nigerians misunderstand about investing. This is critical. And getting this wrong is where most people lose their money. A lot of people think investing is simply putting money somewhere and expecting quick returns. They see it as a get-rich-quick scheme or a way to double their money overnight. But in reality, investing is the strategic process of planting money today to grow it consistently over time through the power of compound interest and value appreciation. Think of it like farming. And I'm serious about this analogy because it perfectly captures what investing is all about. If you plant maize today, you won't harvest in 24 hours. It doesn't matter how much you stare at the ground or how desperately you need the harvest. You have to water it consistently, protect it from pests and harsh weather, give it the right nutrients, wait patiently, and then, only then, will it multiply and give you returns far greater than what you planted. That's exactly the same principle with investments. You plant your money in the right vehicle, give it time to grow, protect it by making smart decisions, and let compound interest do the heavy lifting for you. Compound interest is when your money makes money, and then that money makes even more money. It's the eighth wonder of the world, as Albert Einstein reportedly called it. So if anyone tells you, bring 50,000 today, collect 100,000 next week, or triple your money in 48 hours guaranteed, just know that's not investing. That's gambling. And worse, it's often a scam. Statistics show that 90% of the time, you'll lose your entire money in such schemes. We've seen it with MMM, Twinkis, Czar Fund, and countless others that have crashed and burned, taking people's hard-earned money with them. Real investing requires patience, education, and discipline. Now that we've established that foundation, let's talk about what you must do before you even think about investing your first naira. 3 critical things you must do before you start investing. Step 1, build an emergency fund. This is non-negotiable, and I cannot stress this enough. You cannot and should not invest with your last money. Investing is about using your surplus, not your survival fund. Life is unpredictable, especially in Nigeria, where things can change overnight. If your laptop suddenly spoils and you need it for work, if your phone drops and breaks, if you or a family member gets sick and needs medical attention, or any unexpected expense comes up, you shouldn't have to withdraw your investments to handle it. Why? Because most investments have lock-in periods, withdrawal penalties, or you might be forced to sell at a loss if the market is down at that moment. Plus, constantly withdrawing from your investments defeats the entire purpose of long-term growth. So before you invest a single naira, build an emergency fund. Keep at least 30,000 to 100,000 naira somewhere safe, liquid, and easily accessible for emergencies. This could be in a regular savings account or a platform that allows instant withdrawals. The amount depends on your lifestyle and expenses, but a good rule of thumb is to have 3 to 6 months of your essential expenses saved up. This emergency fund gives you peace of mind and allows your investments to grow undisturbed because you're not constantly dipping into them when life happens. Step 2. Clear high-interest debt. If you currently owe loans from apps like Fair Money, Branch, Palm Credit, Carbon, or any other high-interest loan platform, please clear those debts first before you start investing. This is crucial financial wisdom. Here's why. The interest rates on those loans are typically between 15 to 30% or even higher per month. Meanwhile, most safe investments will give you returns of about 10 to 18% per year. Do the math. You're losing money if you're investing while still paying those crazy interest rates on debt. It makes no financial sense to be earning 12% annual returns on an investment while simultaneously paying 25% monthly interest on a loan. You're literally working backwards. Clear the debt, free yourself from that financial burden, and then you can invest with a clean slate and actually make real progress. The only exception might be very low-interest debt like a mortgage or a student loan with reasonable terms. But even then, you need to be strategic about balancing debt repayment and investing. Step 3. Know your risk level. Not all investments are created equal, and not all investments are suitable for everyone. You need to honestly assess your risk tolerance before choosing where to put your money. Ask yourself, how would I feel if my investment lost 20% of its value tomorrow? Would I panic and sell, or would I stay calm and wait for recovery? Can I afford to lose this money without it affecting my daily life? How long can I leave this money invested without needing it? Your answers will determine your investment strategy. If you hate risk and prefer safety, start with fixed income investments like Treasury bills, PiggyVest, SafeLock, or Cowrywise. These options give you predictable returns and your capital is relatively secure. You won't make spectacular gains, but you also won't lose sleep at night worrying about your money. If you like moderate risk and want balanced growth, go for mutual funds and index funds. These spread your risk across multiple assets, giving you growth potential while maintaining some stability. It's the middle ground that works for most beginners. If you like high risk and want maximum growth potential, you can explore stocks and cryptocurrency. These can give you significant returns, but they can also lose value quickly. The volatility is high, so you need strong nerves and a good understanding of what you're doing. But remember this golden rule. Start small, learn as you go, and grow gradually. Never carry your whole salary and dump it into investments, especially high-risk ones. Invest only what you can afford to lose without it affecting your quality of life. Best investment options for beginners in Nigeria. Now let's dive into the practical part, the actual investment options available to you as a Nigerian beginner. I'll break down each one, explain how it works, and tell you where you can access it. 1. Treasury bills. Treasury bills are government-backed investments, and they're one of the safest options you can choose in Nigeria. Here's how it works. The Nigerian government needs to borrow money for various projects and operations, so they issue these T-bills to citizens. You essentially lend money to the government, and they pay you back with interest after a specified period, usually 91 days, 182 days, or 364 days. The beauty of T-bills is that they're super safe because they're backed by the full faith of the federal government. Unless the entire country collapses, you'll get your money back with interest. The returns are typically around 10 to 18% per year, depending on the economic climate and central bank policies. If you want peace of mind and guaranteed returns, T-bills are one of the safest options. You can buy T-bills through your bank, though the process can be bureaucratic and slow. Alternatively, you can use investment apps like Chaka, Bamboo, Trove, or Cowrywise, which have simplified the process and allow you to buy T-bills with just a few clicks on your phone.
2. Fixed savings and high-yield accounts. These are perfect for beginners who struggle with spending discipline. Platforms like PiggyVest, with their piggy bank and SafeLock features, Cowrywise, and MoneyPoint MFB savings allow you to lock your money for a specific period and earn returns that are significantly higher than traditional bank savings accounts. Traditional banks in Nigeria pay ridiculous interest rates, sometimes less than 1% per year, which doesn't even match inflation. But these digital savings platforms pay between 8% to 15% per year, depending on the product and lock-in period. The longer you lock your money, the higher the interest rate. For example, PiggyVest's SafeLock allows you to lock money for as short as 1 day or as long as several months, and you can't touch it until the period ends. This forced discipline is great if you have the tendency to spend money the moment you see it. This option is fantastic if you want predictable growth, you're building towards a specific goal, and you want something simple that doesn't require constant monitoring or investment knowledge. 3. Mutual funds. Mutual funds are perfect for beginners who don't know how to pick investments individually and don't want to spend time researching stocks, bonds, or other assets. Here's how it works. A professional investment company gathers money from many people like you and pools it together. They then invest this large pool of money across different assets, stocks, bonds, real estate, and more. Because they're investing large amounts and have professional fund managers with expertise, they can access opportunities that you, as an individual, might not be able to access. They diversify the investments to spread risk, and you get to benefit from this professional management. Examples in Nigeria include ARM mutual funds, Stanbic IBTC mutual funds, and Cowrie Wise mutual funds. You can start with as little as 5,000 naira on some platforms, and your money grows based on the performance of the fund. The advantage is that you don't need deep investment knowledge. The fund managers do all the hard work of research, analysis, buying, selling, and rebalancing. You just put your money in and watch it grow over time. The returns vary but typically range from 10% to 25% per year, depending on the type of fund and market conditions. 4. Buying shares and stocks. When you buy shares or stocks, you're buying a small piece of ownership in a company. If the company grows and becomes more profitable, the value of your shares increases and you can sell them for a profit. Additionally, some companies pay dividends, a share of their profits distributed to shareholders. In Nigeria, you can buy shares of companies like MTN, Zenith Bank, Dangote Group, GT Bank, Airtel Africa, and many others listed on the Nigerian Exchange, NGX. The platforms that make this easy include Chaka, Trove, and Bamboo, which also allows you to buy U.S. stocks like Apple, Tesla, Amazon, and Microsoft. Stocks have the potential for massive growth. Someone who bought MTN shares when they listed in 2019 has seen significant returns. However, stocks can also go down in value, sometimes dramatically, especially during economic downturns or if the company faces challenges. This is why you need to learn before investing heavily in stocks. Understand basic concepts like PE ratios, market capitalization, earnings reports, and industry trends. Start small, maybe 10,000 or 20,000 naira, learn from real experience, and gradually increase your investments as you gain knowledge and confidence. 5. Real estate. Real estate has always been one of the most reliable wealth-building tools, but traditionally, you needed millions of naira to buy property. Not anymore. Thanks to financial technology, you can now participate in real estate through fractional ownership. Fractional ownership means you can buy a small unit or percentage of a property alongside other investors, and you earn rental income proportional to your share. When the property is eventually sold, you also get your share of the profits. Examples of platforms offering this include RiseVest with their real estate plans, Wealth.ng Real Estate, Corium, and Spleet. You can start with as little as 10,000 naira on some platforms, and your money grows based on the performance of the property. The advantage is that you're investing in a tangible asset that typically appreciates over time. You can earn passive rental income, and you're protected against inflation because property values usually rise with inflation. The downside is that real estate is less liquid. You can't quickly convert it to cash like you can with stocks or savings. 6. Cryptocurrency for those willing to learn. Cryptocurrency is high risk, high reward, and it's one of the fastest growing investment areas globally. Bitcoin, Ethereum, and other cryptocurrencies have created countless millionaires, but they've also caused significant losses for those who invested without understanding what they were doing. If you're a beginner interested in crypto, don't jump into meme coins, random altcoins, or whatever is trending on Twitter. Start with established cryptocurrencies like Bitcoin, which is digital gold, Ethereum, which powers smart contracts and decentralized applications, or stablecoins like USDT and USDC, which are pegged to the US dollar and offer stability. Use secure and reputable exchanges like Binance, which is the largest globally, Bybit, Coinbase, or Quindax, which is Nigerian and allows direct Naira deposits. Never leave large amounts of crypto on exchanges. Learn about secure storage methods like hardware wallets. The golden rule with crypto: only invest what you can afford to lose completely. Crypto markets are extremely volatile. Your investment could double in a month or lose 50% of its value in a week. And please, learn before you invest. Understand blockchain technology, market cycles, and the specific cryptocurrencies you're buying. 7. Dollar investments. Given the instability of the naira and its continuous devaluation against major currencies, earning and saving in dollars is one of the smartest financial moves any Nigerian can make. In the past 5 years alone, the naira has lost more than half its value against the dollar. This means if you had 1 million naira saved in a naira account 5 years ago, the purchasing power of that money has been cut in half. But if you had converted it to dollars, you would have actually gained in naira terms. You can invest in dollar savings accounts, dollar mutual funds, foreign stocks listed on the U.S. Stock Exchange, or Euro bonds, which are international bonds. Platforms like RiseVest, Bamboo Dollar Vaults, and Trove help you easily access these dollar-denominated investments, helping you hedge against inflation and currency devaluation. Biggest mistakes Nigerian beginners make. Let me share the most common mistakes I see Nigerian beginners make so you can avoid them and accelerate your wealth-building journey. Mistake 1. Expecting quick returns. Investing is a long-term game, not a fast money scheme. If you're expecting to invest 50,000 naira today and become a millionaire next month, you're setting yourself up for disappointment and poor decisions. Real wealth is built slowly and consistently over years, not days. Mistake number 2, following hype on social media. Just because someone on Instagram or Twitter is hyping an investment doesn't mean it's legitimate or suitable for you. People hype things they don't fully understand, or worse, they're trying to scam you. Always do your own research, verify information from multiple credible sources, and never invest based on social media hype alone. Mistake number 3, putting all their money in one place. This violates the fundamental principle of diversification. If you put everything in one investment and it fails, you lose everything. Spread your investments across different asset classes, some in safe options, some in moderate risk, and a small portion in high risk if you can afford it. This way, if one investment underperforms, others can compensate. Mistake number 4, not tracking expenses. You can't invest if you don't control your spending. Many people complain they don't have money to invest, yet they spend 5,000 naira on unnecessary things every week. Track where your money goes, cut unnecessary expenses, and redirect that money to investments. Small amounts add up significantly over time. Mistake number 5, investing without learning. Would you perform surgery on yourself without medical training? Then why would you invest your hard-earned money without understanding what you're doing? Take time to learn, read books, watch educational videos, take courses, and understand what you're putting your money into. Knowledge is your best defense against losses. Your simple 3-step beginner investment plan. Let me give you a practical, actionable plan you can start implementing today. Step 1. Save your first 10,000 naira to 50,000 naira. Before you start spreading your money across different investments, accumulate a starting amount. Put it in a safe, disciplined platform like PiggyVest or Cowrywise, where it can earn some interest while you're building up a foundation. This gives you a foundation to work with and proves to yourself that you can commit to saving. Step 2. Learn one investment type. Don't try to understand everything at once. That's overwhelming. Pick one investment type that interests you and spend 1 week learning everything about it. For example, spend 1 week learning about stocks, how to read stock charts, what makes stock prices move, how to analyze companies.
Then, spend another week learning about crypto, what blockchain is, how wallets work, and how to identify good projects. Then spend another week learning about mutual funds or real estate. This focused learning approach is much more effective than trying to learn everything simultaneously. Step 3. Start small and grow gradually. Once you've learned the basics, start with small amounts across different investments. For example, you could allocate 5,000 naira to crypto to learn how it works, 10,000 naira to mutual funds for moderate growth, 20,000 naira to fixed savings for stability, and 30,000 naira to treasury bills for safe returns. Keep adding small amounts monthly. Even 5,000 or 10,000 naira per month adds up significantly over time through the power of consistency and compound interest. If you followed this video to the end, congratulations. You now know more about investing than most people around you. You understand the fundamentals, you know the mistakes to avoid, and you have a clear action plan. Don't wait for the perfect time because it will never come. Don't wait until you earn millions because by then, you would have missed years of compound growth. Start small, start smart, and most importantly, stay consistent. Consistency beats perfection every single time. Remember, every wealthy person you see today started somewhere. They started small, they made mistakes, they learned, and they kept going. Your financial future is in your hands, and the best time to start was yesterday. The second best time is right now, today. If you want a part 2 where I break down the best apps for investing in Nigeria step by step, or a detailed guide on how to buy your first stock or cryptocurrency with screenshots and walkthroughs, let me know in the comments below. I read every comment and I create content based on what you need. Don't forget to like this video. Seriously, it helps the algorithm show this to more Nigerians who need it. Subscribe to this channel so you don't miss future videos on wealth building, personal finance, side hustles, and financial freedom. And please, share this video with someone who wants to start building wealth in Nigeria. Together, we can create a financially educated generation. Thank you for watching, and I'll see you in the next video. Keep building, keep learning, and keep growing your wealth.